Are you asking yourself, how do I navigate the transition from residential to commercial real estate? If so, you're watching the right video. My name is Mario Joyner with West Coast offmarketpropertyfinder.com, and we answer this question nearly every day. Now, many of those that use our concierge services are currently residential investors looking to transition into commercial income producing property. Some of the reasons would include tired of personally guaranteeing the loans, concerning themselves with debt to income ratios, or just looking to scale, just to name a few. Since we work with lots of residential investors, we thought it would be beneficial to discuss navigating the transition from residential to commercial real estate investment. This is part one of a two-part discussion, so without further ado, let's discuss. Individuals making a first-time real estate investment often begin with a residential rental property acquisition to jumpstart their investing career. Purchasing a condominium, single-family home, or duplex can be a good introduction to earning rental income and experiencing the responsibilities associated with managing a real estate investment. However, trying to grow a portfolio from one residential property to many can be a daunting task because residential real estate investments can be tough to scale and time-intensive to manage, especially if they are located in multiple markets. Now, for those looking to accelerate the growth of their portfolio, or to take a more passive management role, a transition from residential to commercial real estate investment is a logical next step, but it can be daunting due to the larger scale, complexity, and investment requirements. It doesn't have to be though. Now, residential versus commercial real estate investment, some pros and cons. Residential real estate is an asset class unto itself, categorized by the purchase of real property associated with where people live. Purchasing a single-family home is the most common type of residential real estate investment, but condominiums, undeveloped land, townhomes, duplexes, and triplexes also qualify as residential real estate. In most cases, an investor's intent is to purchase the property and rent it out to someone else for income. Now, commercial real estate is a distinctly different asset class, categorized by the purchase of real property where business is conducted, and it's divided into four categories, depending on the property's function. Office, one or more buildings designed for the needs of operating a business. Examples include general office space like a high-rise or specialized office space like medical or dental. Industrial, property designed to accommodate an industrial purpose such as a standalone distribution warehouse, factories, or flex spaces. Multifamily, now there's a distinct difference between residential multifamily, which is less than 4 units, and commercial multifamily, which is 5 or more housing units contained within the same building or cluster of buildings. Retail, property that houses tenants who engage in direct-to-consumer sales activities. Examples include shopping malls, strip centers, and standalone bank branches. A residential real estate investment is a good option for first-timers because the capital requirements are low, relatively speaking, and it offers a series of benefits including stable income, price appreciation, depreciation write-offs, and the opportunity to build equity with OPM, other people's money. However, for an investor looking to build a portfolio at scale, there's a real efficiency challenge to managing a geographically diverse property portfolio, including things like chasing late payments, basic maintenance, and regular inspections. In addition, leases tend to be short-term, which is less than 12 months, and tenant turnover tends to be high. Conversely, a commercial real estate investment offers the opportunity to build economies of scale because multiple units are often located within the same building, and back office functions like accounting and finance can be centralized and spread over multiple assets. Additionally, multi-year leases provide stable, long-term income, and commercial real estate tends to be a good hedge against stock market movements. But there's often illiquid and require high levels of upfront investment, which creates barriers to entry and makes the transition from residential to commercial investing difficult. Now, how can we help? West Coast offmarketpropertyfinder.com is the leading resource for concierge off-market commercial income-producing properties. We're both real estate professionals and financiers. We have relationships with numerous commercial property portfolio holders such as REITs, insurance companies, and hedge funds. Through those relationships, we have access to off-market properties. That's how we do what we do. We leverage our relationships. We only ask that you follow our proven process and give it a fair chance, and then draw your own conclusions. We use our connections to conduct private inquiries on your behalf. Again, the process is very simple and straightforward. Before we proceed, find out more about us at westcoastoffmarketpropertyfinder.com. Thanks for watching, and stay tuned for part 2 of this topic, navigating the transition from residential to commercial real estate investment. We encourage you to find out more information about us and our videos by subscribing to our YouTube channel and select the notification button. The link to subscribe and view our catalog can be found in the description section. Again, it's Mario Joyner, and until next time, have a wonderful day.